Good morning, everyone, and welcome to your Daily Five. I'm Leslie Jouflas, and I'm hosting today. This is the show where we've got 10 minutes to present five charts. And today, I'm kind of following up on the last Daily Five and the final bar that I was guest on with David Keller last week. So the last Daily Five was from June 15th, and the final bar show with David Keller was June 17th. And so we're going to look at some charts and follow up on what I presented there. Now I'm going to use four time frames today on the S&P 500 E-mini, and I'm going to show you how I determined some important price levels. We hit the first downside target that I talked about. And so now we'll see where the price is and where we might be going and some scenarios to take a look at. So the first one that we're looking at, this is a daily chart of the S&P 500. Now, if you don't trade futures, the S&P in any form, that's fine. But if you do trade individual stocks, it's a good idea to be looking at an overall view of the index or the indexes, because sometimes it will give you a picture of what price might be doing. So with that in mind, this chart here is showing a long parallel channel to the upside. Now, these pink lines that I have drawn in here, these are just showing these similar swing sizes to the downside that have been occurring on corrections. Now, sometimes these types of similar swings, they'll either be a little bit of an extension, like I have here with this green line, and they will tend to extend by Fibonacci ratio 1.27. 1.618, sometimes larger extensions, or they can also be contractions, like see this little high to low here. So this is about like 0.618 of this full size swing. So just to give you a quick synopsis of what that is. So when I did David's show last week, right here where this dash center line is, that's where price was sitting, and I was expecting a downward move. So we got the downward move, and then yesterday we got a bounce back up to the upside. But this is what I'm looking at for a little bit larger time frame, is I've drawn in a potential A to B, B to C, C to D, with another, the CD leg being another decline to the downside. I've got this lower trend line drawn in, and you'll see some Fibonacci ratios here. So I'm taking this low to high and looking at the 786 and the 886 retracements combined with this pattern set up, everything sort of intersecting together with this trend line. So that's what I'm looking at. Now let's go and look at the next chart and start scaling down time frames. So this is a 240-minute chart of the S&P 500. Now this gives us a different view and some more information. So here we're looking at really horizontal trend lines and price levels, and we can see support and resistance, gap lines, etc. Now we can tie this into the first chart. The lows of Globex on Sunday in the S&P were right at this 0.618 that's in the yellow circle, right around this 41.29 area. And in another chart or two, I will show you the buy pattern that completed right around here. But clearly we can see that we're still within this large range in the S&P 500. Now, the 886 retracements that I just showed you, and though that lines up down at the lower end of this range with that potential ABCD buy pattern that I just showed you. So the ranges tend to be testing highs and lows, and they get these center lines in them. So, going to be watching and monitoring if we see another move to the downside for potential support coming in and around those level. So, what negates that buy pattern is if the S&P goes to new highs. That's going to negate that pattern. That structure is no longer going to be there. However, if S&P does go to new highs, I'm expecting to see negative divergences on those highs, and I'll show you why in just a few minutes. Okay, so I want to be monitoring this range, got a potential pattern, but eventually price is going to move out of this range, and it's probably going to do so with some force when it gets out of there. So now we're scaling down to this is an intraday tick chart. I think it's about 20,000 tick chart of the S&P 500. And here's the A, the B, the C, the D buy pattern. There's the 41.29, the Globex lows on Sunday, down at the other support areas I showed you on the first chart. And now the bounce back up to the upside. So we want to now watch these levels on the upside, this 4220-ish area and the 4230 to 40 area were points that the market spent quite a bit of time trading around. And we'll look at this on the next chart. But first, I just want to point out here, I also put in right around that 41.29, those Globex lows where this pattern completed. I did a swing from this low to high, and taking the length of this swing, you multiply it by 1.27, subtract from the high, and that brings you down to a 1.27 expansion of that swing. And then also the 618 retracement came in right at that level too. So a number of things going on at this level. So that now makes this 4129-ish area an important area of support to be keeping an eye on. So so we have this range now all the way up 4258 highs, and now this 4129 is a low I'm going to be watching. So let's look at the 15-minute chart now, an even shorter time frame. And let's see what we can get from this chart. So this chart I also previously had from the June 15th episode of your Daily 5. So you can look up that episode and find the information that I was talking about on that. But so the market bounced up and we've come back up to this previous range. And you can see yesterday we had a strong move to the upside. Market was testing these lows just above the 4,200 level. Now here's that 4220 level and that 4238 level I just mentioned. The 4220 had been the previous center of this range. And you can see all of the, testing around this area. The Globex highs last night got up to about 42.26, so still testing around this area. So looking at this previous range, this also gives us a good gauge of the highs and lows to be watching. And so now let's just move to the next chart. And this is a chart of the triple Q. So this is how I'm tying in the indexes together. And there is a big butterfly sell pattern. It's no longer a Gartley pattern because we're above this last swing high. So now we're looking at a butterfly sell pattern with the potential completion area somewhere around this 350 area. Now, the NASDAQ also has this same pattern. And we can see on the RSI here, there's some negative divergences forming. The MACD has some negative divergences. Same with the NASDAQ. So we might be looking at a scenario where the Dow Jones Industrials are not making new highs, the S&P 500 not making new highs, but these, the Qs and the NASDAQ coming up and completing these butterfly sell patterns. So here's the scenario that I'm tracking. that if the triple Qs and the NASDAQ complete the sell patterns, and the S&P 500 and the Dow Jones Industrials has no new highs, or there's negative divergences with new highs, and then signs of weakening once if the Qs and the NASDAQ appear to be completing this pattern and turning down, then that will be a signal to the downside. And then I'll be watching those target levels below that I showed you on the first chart using that daily chart. So that's what I'm looking at. And I hope you get kind of a sense of how I combine the time frames to get some different pictures to find the price levels that say either they're holding or they're breaking, and work those with patterns. So if you like these types of patterns, I've got this 3.5 hour. This is sort of a kick the tires kind of a lots of information in here, lots of materials included with this. And you can just come and find this on my website right here, Trading Live Online, or email me. I can send you the link, and you'll also get a PDF copy of this book here. Well, thanks for joining me today. I hope everybody has a great week, and I will see you on the next Daily 5.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.